What's up everybody? Welcome to the Stocks channel. My name is Corey and in today's video we'll do macro level analysis on the indices, the Russell 2000, the VIX, and Bitcoin. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the SPX we're looking at a weekly chart, so every candlestick represents one entire week's worth of price action. So we can see we did have a very bullish week, even though we did see volatility and we did dip all the way down into the 4240s. We closed up in the 4400s and our next price target is just above at 4488. That's just another 1.7% move to the upside and we're there. Above that, our next price target is 4605, which is another 4.2% move to the upside. So you can see it's very likely the SPX is going to get to at least 4600 as long as we keep maintaining this bullish trend. The price action did close the week above the 5 EMA, and we still have all the moving averages stacked to the bull side, and they're in a very strong bull trend mode. You could see great separation and they're all positive sloping, and we've been in this strong bull trend for quite a while. As long as we have a bull trend this strong, people will continue to buy the dip and this bull market will not die easily. You can see on the weekly Bollinger Bands we still have plenty of room to the upside, and these Bollinger Bands will continue to expand, allowing the SPX to hit my price targets without any resistance from the Bollinger Bands. You can see we're coming out of a really nice sideways consolidation, so this is considered a strong breakout. You can see we did backtest that breakout intra-week, and we did see buyers coming in and buying at those levels, which does tell us that this is the real deal breakout and we are likely going to continue this bull rally. Remember, I've been saying expect a summer bull rally, and you could see we're in the thick of it and we are starting to see the price action breaking out to brand new all-time highs. So continue to see this summer bull rally continue until we get to these price targets. Remember, on macro level analysis, anytime you get to these price targets, it could always trigger a stock market correction. So we're very close to these price targets, so you need to start thinking about how you want to get defensive and cautious as we reach these levels. You don't want to be over leveraging and you don't want to be taking on too much risk as we come into these price targets. One of the strongest support levels on the weekly chart is going to be down here right around 4150, and our 20 simple moving average is just above in the 4180s. So we do have strong support just about another 5.5% lower, but that will be a painful drop from these price targets if you're completely in the market long and you have no cash and you're over leveraged. So be cautious and be disciplined and understand as we get closer to these price targets, you want to start taking some profits. On the monthly chart of SPY, we still see absolutely nothing wrong with the price action or the trend. We still have a very strong monthly chart and the price action is well over the 5 EMA. Remember, eventually we will go through a stock market correction at one of these price targets, and I'm not in the business of calling a top, so I'm not going to predict when that will be. But when we do finally put in a top, it's very likely we're coming back down to retest these trend lines. So from this first price target, if that were to trigger the correction, we could come down an easy 15% until we get to that first level of support. The 20 simple moving average is all the way down here around 21% lower. So you can definitely see on the monthly chart, things are getting a little overextended, and there's no guarantee on how long that will last, and there's no guarantee on how soon we have to go through a correction. Just understand there is plenty of room to the downside when the time finally comes, so understand as we get closer to these price targets, you want to start taking some profits. On the bear bull survey, we can see that we have a Goldilocks ratio with about 30% in every single camp. We have 30% bulls and 30% bears, and we're sitting just above 38% for neutral. So there still is plenty of cash on the sidelines. The way I view this survey is 38% of the people in cash and 30% of the people are trying to short this market, and we're in a very strong bull market, so that does increase the probability we're just going to continue to melt up from here. You need to see extreme greed levels before you start getting cautious looking at this indicator, and right now we just don't see extreme greed. The bulls are only at 30% and we've seen over 48% just back in June. So right now I don't see any concerns with the bear bull survey. If anything, it's leaning towards being bullish until we get to our price targets. Eventually I do expect to see this turn to greed, and that will start signaling that we're nearing a top. On the NDX, we also had a very bullish week, closing well above that price target at 14,832, and we still have the very strong bull trend. Remember, the NDX is also coming out of a sideways consolidation, so this is considered a breakout. And after you break out of a consolidation, you will see a massive move to the upside or the downside. Because the breakout was to the upside, we're seeing a very bullish run from here. Remember, I said expect to see the tech sector doing the best in the summer rally because we do have a low rate environment which favors tech companies and growth companies. So right now we're seeing the triple Qs taking over back their leadership, and they're significantly outperforming. Expect to see that leadership continue going into big tech earnings. And remember, with earnings, you could always have a sell the news event. So the next price target is just above at 15,272. And if we break above that, we could start running to the next price target at 15,985. The price action is at the top of the upper Bollinger Band on the weekly chart, but remember, those Bollinger Bands will expand week over week. So we are going to start seeing resistance from the upper Bollinger Band, so you need to be mindful of that. That doesn't mean we can't go higher, it just limits how high we can go before we start running into resistance. On the monthly chart, we can still see the price action well over the 5 EMA, and we still have the very strong bull trend. You could see there's plenty of room in the upper Bollinger Bands for the month of July, and we are going to see these Bollinger Bands continuing to expand going into the month of August. So on the monthly chart, there's no resistance from the upper Bollinger Bands, and you can see it does take us into our next price target. So we still have very strong bull trends on these weekly and monthly charts, which tells you this is a very strong bull market from a macro level view. Remember, we still need to do day-to-day analysis to see the early warning signs that the market is going to roll over, but as long as we have strong bull trends on the weekly and monthly charts, this is still going to remain a strong bull market. As you can tell from the weekly chart, we can easily see 3 to 4 weeks of volatility, but we never actually lose the bull trend, which increases the probability the bull trend will resume to the upside after the volatility subsides. So there's always a possibility when we're getting into these price targets that we see a few weeks of weakness before we continue higher. Remember, don't try to call a top, and don't just assume that we have to have a huge correction this year. Calling a top is a loser's game, and if I haven't proven that by now, eventually you'll understand what I'm talking about as you continue to try to call a top and the market continues to prove you wrong. On the Dow Jones, we also had a bullish week today, and on closing prices on the weekly chart, we do see the Dow Jones closing at a brand new all-time high. We're still over the 5 EMA and we still have the bull trend, which tells us all three indices still have bullish price action with bullish trends. We see no issue with the upper Bollinger Band giving resistance, and we are starting to see those Bollinger Bands starting to squeeze, which does increase the probability we could see a big move from these levels. On the monthly chart, we can see that we're currently sitting at a brand new all-time high on the monthly chart as well, and we're sitting well above the 5 EMA with the very strong bull trend. Remember, the Dow Jones is already coming out of a Bollinger Band squeeze, which did fire to the upside, and the Dow Jones has been underperforming lately. So to see the Dow Jones start running from here would not surprise me, and as you can tell in the monthly Bollinger Bands, there's plenty of room to the upside. Jumping over to the Russell 2000 weekly chart, we did see the Russell 2000 retest that critical support trend line. Remember, it was right around 2100, and we did see the week dip down there, and we did see a sharp bounce off of that level. So that is great news because that means the Russell 2000 has officially tested the breakout level. Remember, we broke out of that resistance trend line going all the way back to January of 2021, and we never retested that breakout until just this week. So that is a bullish retest of the breakout, and as long as the price action can remain above that support level, we could see the Russell 2000 going back into a bull market. Remember, the Russell 2000 has been going absolutely nowhere but sideways, and it doesn't have a bull trend or a bear trend, and it's just been chopping around in a corrective pattern. If we see the Russell 2000 getting back above about 2300, which is basically getting back over our 20 simple moving average, we could see a bull trend returning. You could see the Bollinger Bands are getting very tight, which does mean the price action is getting squeezed, and that does mean we should start seeing a deviation from the mean very soon. Remember, it could break to the upside or the downside, and currently the price action is below the critical support of that 20 simple moving average. We're still above our critical support trend line, but we're losing momentum, and you could see the moving averages are starting to cross below the 20 simple moving average. So look for this in the near future to see if the Russell can get back over that 20 simple moving average, or if it's going to come back down and try to retest the support level and possibly break out to the downside. It could really go either way, and it's just a sideways choppy market, so you need to watch that price action closely. On the monthly chart, you can see this a little clearer that we are having a very volatile month of July for the Russell. We came back down to that support and we're currently bouncing, but we haven't closed out the month just yet because there's still one more week of trading. We have plenty of room in the upper Bollinger Band to go higher, but the price action is getting stuck in the mud in this consolidation. We still have the bull trend on the monthly chart, and the price action is currently sitting right around that 5 EMA. So the Russell 2000 is going to be very interesting to see where it goes from here. On the VIX, we still see that we're forming lower highs, and we are getting these volatile spikes that continue to form lower highs. These are just volatile pullbacks, and they're normal in every bull market, and they're not stock market corrections. To see a stock market correction, we need to see the VIX breaking out and forming a new weekly high, and we just have not yet seen that. The VIX is still in a bear market, and all of the moving averages are stacked to the bear side. and the price action is below all the moving averages. So at this rate, in the strong bull market, I'm looking to see if the VIX is going to continue to bleed out back down towards 14. If we see the VIX spiking out above about 24 to 25, that could signal a stock market correction, so you need to look out for that. But right now we see the VIX forming lower lows and lower highs as it continues to bleed out in this bull market. On Bitcoin, we're currently trading right around 34,000 and we still see Bitcoin consolidating around the weekly 50 EMA. We do see that there is no trend for the bulls or the bears on the weekly chart, and we definitely see a lot of weakness in Bitcoin's price action because it can't seem to get away from this consolidation period around the 50 EMA. The good news is this consolidation will have to come to an end as soon as August. So there's only about another week or two of this consolidation before we need to see a breakout to the upside or a breakdown to the downside. To the upside, we need to see Bitcoin getting back over 35,000 and then attempting to break out above 39,000. To the downside, we need to see Bitcoin break below the $30,000 support and then either test 27,000 as support or break below that and possibly come back down to 20,000. So on the weekly chart, it really could go either way, and Bitcoin is in a consolidation. We are starting to see a little bit of an increase in volume, and we are seeing a green candlestick for this week, which could tell us that Bitcoin does want to break out to the upside. But we need that confirmation price action break above 35,000 and then a break above 39,000 to really know for sure. On the monthly chart of Bitcoin, you can still see that we do have that parabolic blow off top look, and we never actually lost the bullish trend on the monthly chart. The price action is still above the 13 EMA, and all of these moving averages are still stacked to the bull side. So the good news for the Bitcoin bulls is we still do have a macro bull run going into Bitcoin, which does mean we could still break out to a brand new all-time high to finish out the year. So I'm personally not giving up on Bitcoin myself, and I do think these levels are accumulation levels. When everybody is bored and sick and tired of crypto is exactly when you want to start buying, and when everybody's talking about it and how they're going to get rich off of it is when you want to sell. So right now this still looks like bullish accumulation over these critical support levels and getting ready for the next bull run in Bitcoin. So watch these levels closely because the price action is going to tell you whether Bitcoin is going to break out or break down. So you need to continue to watch Bitcoin at these levels and do expect to see something happening soon. So to pull this all back together, jumping back over to the SPX weekly chart, remember that we've been in a bull market going all the way back to August of 2020 on a macro level scale. Remember we had that crash in March 2020 and we've regained the bull trend, and this bull trend is very strong. When you get a strong bull trend on weekly and monthly charts, bull markets will not die easily. So don't just assume every 2 to 3% pullback on a daily scale is going to be the next stock market correction or a stock market crash. That's just not how it works, and you need to see a breakdown in the technicals before you're going to see the market roll over and die. This is a very strong bull market, and if you're staying objective and you're following the price action and the trend, you should have been on the right side of the trade this entire year. Trying to time the market and call a top is a loser's game, and eventually somebody will call it correctly, but the people that do call the top correctly have been calling for a top for years, and eventually that broken clock is going to be correct. So don't bother trying to call a top and just watch these price targets. When we get to these price targets, just get more cautious and more defensive, because remember in technical analysis, every time one of my price targets are met, it increases the probability chance for a pullback and or a correction. So stay objective and stay on the right side of the trade. And right now you still have to be a bull in this bull market. Remember, in a bull market, you want to buy the dip and you want to position yourself to buy off critical support. You can try to short a bull market, but you don't want to be accumulating short positions because the trend is still higher, which means the price action wants to continue to go up. If you're accumulating short positions, eventually you will blow up your account and you will have no money left to continue to trade. So just stay objective and continue to watch the price action and the trend. Also remember, I have my trade alert service that only trades TQQQs called BANC trade alerts, and all you have to do is execute the trades yourself. You get all the buy and sell alerts via email and text message, and it's very simple to follow, and it has very great returns. I'm running a 50% off promo code for your first month, so now is the best time to try BANC trade alerts. You can find out all of the details and how to join in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to always help you navigate this market and stay on the right side of the trade. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.